If I take $1 billion and I buy gold, I have a 30,000 pound lump of gold sitting in a vault in the basement of JP Morgan in New York City. You can't rent it. No one's going to live in it. It's hard to mortgage it. You can't put a lien on it. You can't develop it. How do I upgrade the value of gold? Like a London Good Delivery 400 ounce bar is like probably the highest value gold. If I make it jewelry, it probably won't be upgraded. So it's challenging to develop gold or generate yield on gold. If I made it digital gold, then I can move it at the speed of light, and my maintenance costs fall and my custody rights increase. And then what you realize quickly is it's not gold, it's property now.
All right, guys, welcome. This is Peter Voogd, founder of the Game Changers Academy, and I want to thank you guys for tuning into our monthly Millionaire video series where we interview the world's most elite and successful entrepreneurs, CEOs, entertainers, and game changers, people that I have massive respect for and those who are making a massive difference, not just in their industries, but really in the world. This man needs no introduction. We've talked about him many times the last couple of weeks, but our guest today is the CEO of the business analytics software firm MicroStrategy. He's a true pioneer, a visionary, and as a former rocket scientist, Saylor studied at MIT on an Air Force scholarship before founding MicroStrategy in 1989. He's intellectually fearless and someone all of us have got a lot of value from the last couple of years. So, Michael, thank you so much for taking the time to educate our group.
Thanks for having me, Peter.
It's been fun studying and really diving into your company, who you are, your past. I want to talk about something that really intrigued me that I think would be a good starting point. Can you explain to everybody watching the importance of staying intellectually fearless and kind of what that means, as well as first principle? Because it seems as if that philosophy is what allowed you to really understand Bitcoin when you first started consuming that and studying it.
Yeah, well, I think what I learned at MIT was you should think for yourself. But my first memory of my first week at MIT was I'm sitting in a material science class, and a professor who's a consultant for NASA walked out and he said, this tile just burned off the space shuttle on re-entry. NASA doesn't know why, and they're not sure how to solve the problem. Why do you think it burned off? And what do you think we should do about it? There's a bunch of 18-year-old kids, and we'd all come from high school. And in high school, the answers are at the back of every book. And everybody looked at everybody, and you could see what was going on in their head, because their first thought was, did I not read the assigned reading for this lecture? And was there an answer to this that I didn't read? And then they all realized that there was no assigned reading, and the answer was not in the back of the book. Horror. And then they thought, whoa, this guy wants us to figure it out for ourselves. And then they thought, well, actually, people at NASA don't know why, and he doesn't know why. And then you thought, he actually thinks we're smart enough to figure something out for the first time in the history of the human race. And that's a big light bulb when you realize that, you know, there are actually problems to be solved that no one that's ever walked on the face of the earth ever solved. And then once you get over that idea that you got to think for yourself and solve problems, that's very empowering. And then the rest of decent education is all about learning principles, right? Principles of engineering, principles of physics, principles of mathematics, principles of science. How does one work through something? And I think it's more important than ever today because there are so many models. There are models that we use to run our life, and those models are relevant as long as all of the boundary conditions still hold true. For example, you know, there's a way to design a building on Earth, and that works as long as the gravitational constant's the same. But if you were designing the same building on Jupiter, or the same building on Mars, or the same building on the moon, you might not design it the same way. And if you're designing a machine, it doesn't work the same. And, you study things like how to design an airplane. The speed of sound matters, but the speed of sound is a function of the density of the air, right? And the speed of light matters. And once you start to take into account the fact that some of these constants change, or the whole speed of a ship is a function of the Reynolds number and the density of the fluid you're moving through, you can design a ship, you can design a plane as long as all those constants don't change. But then when I tell you to design that thing in a world where the fluid's got a different density and the gravitational constant, or the gravitational force is different, now you're an engineer. And of course, you have to think like an engineer if you're going to build things that fly through space, or things that fly through the air, or things that float through the water. You have to think that way. But a lot of times people don't think about that in economics. And they don't think about frames of reference. And it's pretty important to understand your frame of reference. Like, for example, is the money supply expanding at 0% a year? Because if it's expanding at 0% a year and I pay you 5% interest on a bond, it's not a bad deal. It's pretty good. But if the money supply is expanding at 10% a year and I pay you 5% interest on a bond, you're losing half of your money every 12 years. And if the money supply is expanding at 20% a year, then your negative real yield is minus 15%. And now you're losing all your money in like 5 years. So this frame of reference matters. And once you understand how to think from first principles, then instead of accepting things blindly, like, oh, well, 60-40 portfolio makes sense. Put 60% of your money in equity and 40% in bonds. Well, it only makes sense if everything has a positive real yield. And there's a circumstance under which all the bonds are worth nothing. But you know what? If you think from first principles, you realize that every equity, every stock you own is valued partially on its property component, a component of scarcity, and partially on its bond component, the expectation of cash flows. And so if you're holding a value stock with no growth that yields 5% dividend interest, that's just like a bond that yields 5% interest. They look the same, which means that it's a currency derivative. So when you evaluate economics, you have to be able to think from first principles. What does currency mean? What is a bond? What is a stock? What is property? How do you value property? How do you value a stock? How do you value a bond? How do you value a currency? What is value in the first place? What's the relationship of currency and value to energy? What's the relationship of energy to matter? Einstein said you can't create or destroy energy, right? Matter is energy, E equals mc squared. It's the big finding of the 20th century. Once you start thinking that way, if energy is matter and matter is energy, and all of these things can be modeled from first principles as an engineer, now you can bring them to your life if you're running a business or a country or a company or a family. And it gives you a way to think about things differently. So I think it's important, and I think it goes without saying, anybody that ever studied science or engineering, they learn they have to think from first principles. Right? That's the basic thing you learn. If you went to a good engineering school, if someone said, just read the steam table chart and plug in the number, well, you're really good until the air density changes, and then all those steam tables, they don't work anymore, right? So it's the difference between what they call a particular solution to a differential equation or a homogeneous solution. The homogeneous solution means you can change the boundary conditions and you can solve in all cases and you really know something. And the particular solution means that for a particular place with particular set of boundary conditions, you know a particular thing. So this is something we learn in science and engineering and math. But in economics, too often, economics and politics, I don't think they teach you the reason from first principles. They teach you to kind of oftentimes just accept the conventional wisdom, whatever that might be. I mean, take inflation. Well, 2% inflation is the target, 2% inflation is good. Well, if you accept conventional wisdom, you start by accepting the fact that 2% is a number which equals inflation, and inflation is a concept which is a scalar. And the answer is 2% is not the number, inflation's not a scalar, inflation's an n-dimensional vector. You can no more model the change in price in an economy than you can model the vector, the fluid flow around an aerodynamic body or hydrodynamic body. There isn't one speed at which the water is moving or one speed at which the air is moving. It's a vector. It might be 8-dimensional vector that you need in order to solve a thermodynamic problem. So an engineer would say, well, if it's a scalar, it means you're using arithmetic. Can you build anything with arithmetic? Do you think you can launch a space shuttle with arithmetic? The reason that the tile burned off the space shuttle my freshman year, my first week, was it wasn't any tile. It was the tile on the tip of the space shuttle that got hottest. Not every single tile is getting hot has the same thermal density on it. So, I mean, anybody that thought about it would realize that the tip of the spear or the tip or the edge of the wing is getting hotter. That's the part where you're vulnerable. And when you think about inflation, you realize there isn't one inflation rate. There's a million inflation rates changing everywhere all the time for every product. And you would need a vector calculus, right? A much more complicated type of mathematics to describe things. So if you're an economist, you just accept the fact the economy can be modeled with arithmetic, and a scalar is equal to inflation, and inflation is good. And if you're an engineer or a scientist, you think it's not arithmetic, that's not inflation, and there's nothing good about losing 2% of your energy per time period forever, right? As opposed to losing none of your energy, right? So I think that's why it's useful to think from first principles. It'll save you a lot of pain in life, and it'll allow you to be an original thinker, and also to do things that the conventional wisdom would dictate against doing.
I think more people need to adapt to conceptualize that idea of first principle, because that was really eye-opening to me. Why don't more people in society think for themselves? I feel like we're brought up to question nothing and to accept. So I love the first principle because it kind of shatters that theory. Why don't more people think for themselves and really try to get the first principle?
I think some people, a better education helps, right? If you had the right teachers and they poked you the right way, then that's helpful. So not everyone has the benefits of the best education. I think that culturally, sometimes there are some cultures that encourage independent thinking more than others. I think that the United States traditionally has encouraged more independent thinking than certain other cultures around the world. There are many cultures where they have extraordinary talent, a technique, but they're not thought to be as creative. And there are other cultures where people are really, really creative, but they may not have the same technique. So I think it's cultural. I think that sometimes there's also political dynamics and economic dynamics. For example, if you're in a football stadium and there's 50,000 people and they get to drinking and everybody's pretty happy and they're pretty drunk, and at some point someone says, there's a green dragon on the field and the green dragon is going to spit fire at all of us, we have to get out of this stadium. So you're the dude just showing up at the football stadium and you're not drunk and you don't see any green dragon. But you're walking in and all of a sudden a wall of 1,000 people are coming out and they're all yelling, there's a green dragon behind us and the green dragon is going to flame us with, emerald elven fire. You can say, hold on, I don't think there's any green dragon and I don't think you have to fear any elven fire, but you might very well get trampled to death. And so to a certain extent, even if you know there's no green dragon, and even if you're sure there's no elven fire, perhaps because you have a drone floating over the stadium and it's using infrared, and you've independently verified there's no green dragon and elven fire with facts, doesn't change the fact that the mob is stampeding in a panic toward you and you're going to be crushed to death. So we have examples like that in the market. You have them financially in the market. Right? Sometimes the market gets irrational and you're like, there's just no way, there's no reason that this stock should be going up in value, but it's going up in value. You get caught in a short squeeze. Sometimes there's a cultural short squeeze. You're like, this isn't really rational, but somehow everybody thinks it is. And so I have to react as though it was, because otherwise my business gets ripped to shreds or I get trampled and beat to death. So sometimes I think people don't figure it out. Sometimes they figure it out, but the brute force of the rest of the mob means it's kind of difficult to turn people around. There's a third situation, which is there are certain capital structures and political structures in life. For example, if the money supply is expanding at 15% a year, and your bond yields 5% interest, and you get a negative real yield of 10%. Well, a first principle thinker would say, well, that doesn't make any sense. I'm not going to buy that bond. If you had a pool of capital and you could do anything, you wouldn't buy that bond. But if you worked for a bond company and for the last 30 years, you've been setting up fixed income investment funds and you managed to raise $10 billion from pension funds and unions and governments, and the only reason they gave you the money is because you promised that you would pick the best bond. You have a charter. You have a charter that says you have to invest in bonds. And you have $10 billion of capital. And every year they evaluate whether they put in more capital or take out capital. You have a capital structure. You've built something with inertia. Now, you don't have the option to say, I'm not going to invest in bonds, I'm going to invest in stocks, or I'm going to invest in Bitcoin. Those aren't your options. Your option is, which of these bonds are you going to invest in? So in that particular case, this is a frame of reference issue. It's irrational if you have $1 billion and you can invest in anything to invest in the thing that yields 5% interest if you expect 25% interest somewhere else. But it's not irrational if you have $1 billion of capital and you have to choose between 3% interest and 5% interest. So there is structure, right? There is inertia. Like, your family lives in New York City. You don't want to leave New York City. You get free rent in New York City. In theory, you could buy a house somewhere cheaper, but you're not leaving New York City because you have cultural ties or family ties in New York City. People, you speak Japanese, you don't speak English. Why don't you leave Tokyo and go to New York? The same answer, right? Cultural inertia, economic inertia, legal inertia. There's, we can't, if we simply just wipe the deck clean and you could be anywhere and do anything you wanted, right? That would allow you to move very aggressively. But as a practical matter, it's very rare that an individual can't move anywhere and be anything. Although, look, if you want to buy Bitcoin, you could go ahead and set up an account and buy Bitcoin. It might take you 6 weeks. If you were a company, it might take you 6 months. If you were a 100-year-old company, it might take you 6 years. If there's like 24 people on the board of directors and you meet once every quarter and you only have time to talk for about 1 hour about one thing, then coming up with a new thing in 3 years might be light speed, right? If you're a country, it might take you 16 years. So things have different times that they move with a different speed. The founding fathers that designed the Constitution of the United States of America, they understood it. That's why you elect a Congress every 2 years, a Senate every, a senator every 6 years. They wanted a long duration, House, a shorter duration House. They wanted Supreme Court justices to serve for life, a president to serve for 4 years, right? The idea is different. You're oscillating, or you're vibrating on different frequencies, right? And that way there's some balance to the way that the society adjusts to new ideas.
And we're seeing, because of you as well, more independent thinkers arise, which I think is what's needed to push this culture forward. I want to share somewhat of a monumental moment for Bitcoin cryptocurrency when you really got involved. You stated you were sitting on 500 million on the balance sheet, and you knew you were going to lose 15% of that for the next 4 years, and you needed an alternative. So first principle thinking, you started researching and you found Bitcoin. You stated once you studied and researched, you then went all in, because it was the most intelligent decision. Do you remember what was the tipping point that made you realize Bitcoin was here to stay and to really take that risk at the time, regardless of the government, the FUD, the dips, whatever was happening at that current moment? What do you remember the specific tipping point, the couple things that you research and learn where you're like, wow, this is digital property, digital energy, I'm all in?
I think that March of 2020 was a pretty critical event, right? In March of 2020, we digitally transformed our business, and we started using Zoom, right? Almost in 1 week, the entire company went remote. All of our sales, all of our marketing flipped to Zoom. The week before, if you told me I want to work remotely and I want to meet remotely, I would have laughed at you. And the week afterwards, you couldn't do it any other way. So it was a pretty big inflection point for the digital transformation of communication and business travel and the like. And the implication was the balance sheets have to transform too. I mean, the reason that we switched to Zoom was we didn't have a choice. Right? And there was extreme fear, extreme pressure. There's a war on COVID. And we were going to have to shut down the company if we didn't figure out a way to communicate digitally. And look, we went through three different video meeting tools in 1 day. In the morning, I started with one and it didn't work. And then at noon, I had another one and it didn't work. And by late afternoon, we were using Zoom and it worked. And by the end of the day, a memo went out to 2,000 people in the company saying Zoom is a new corporate standard. That's how fast you do things in a war. Now, there was a war on currency that kicked off in March. The money supply of the United States was probably growing at 7% a year for a decade, started growing at 21% a year in March. And I looked at the world and I said, okay, well, maybe the cost of capital 7% and I can get 3 or 4% interest on my treasury in the 10 years before. It's like, okay, it's a nagging thing, like it's a minus 3% thing. In 30 years, I'm going to lose half my money, if I don't do something. It felt like a small thing. But all of a sudden in March, interest rates went to 0. Monetary inflation rate went to 25%. Now it wasn't 30-year problem. It was you're going to lose all your money in 3 years, 4 years. And so the same issue, right? Which if you study the history of paradigm shifts, what the scientific historians say is you need one of two things. Either everybody's got to die, the old guard's got to die. It takes 30 years, and people that resisted the new idea, they lose their money, they exit this earth. I think you can see it. Like there are certain people with a lot of money in the world that they're not ever going to touch cryptocurrency. But their children or their heirs will do it, right? That's one way. You just wait for the next generation. takes 30 years. And the other way is a war, like a traumatic near-death experience. Like you're not going to fly in airplanes. You don't believe in airplanes. And then World War II comes, and then they're sinking all the ships, and you realize that you're probably going to die if you don't get an airplane. Or when someone flies an airplane above your city and drops bombs on you, you become a real believer in air power in a hurry, right? You can be in denial if it's an option in peacetime, but do you believe in nuclear power? I don't believe in nuclear power. Well, are you against it? Look what happened in World War II, right? The war ended with nuclear power. So, things come to a grinding halt, and you have to jettison your prejudices and your biases when you have this kind of extreme experience. So I think the war on COVID was accompanied by a war on currency, and inflation took off, and the Fed said, we're not even thinking about raising interest rates. So at that point you realize, well, for the next 4 years, this is the status quo. If you're in denial, when you're in denial, you're like, oh, it's a short war, 15 days to stop the spread, right? It's a short war. It'll be over quickly. Interest rates went down, but they'll go back up again, and the money supply will not get expanded. And this is not a problem. I don't have to solve this problem. You're in denial. But at some point, if you say, wow, this is going to go on for 4 or 5 years, 6 years, and it's going to be like this for a while, and there's no hope if I don't actually change my behavior. At that point, you embrace a new idea. And for us, it was digital transformation of sales and marketing and services via web and YouTube and Zoom, and digital transformation of the balance sheet. We need to find a crypto asset that looks like gold on a big tech network that you can move at the speed of light. Did I need it in February? Not really. But by April, it was worth $1 billion to the company. So yeah, I needed it in April. And at that point, I just looked at the history of Bitcoin, and I think that Bitcoin is about 12 years old by then, and it's impossible to know in the first 1, 2, 3, 4 years, right, how this thing was going to work out. But the real important things I focused on were the block size wars. If you look at the experience of Bitcoin from 2018 to 2020, the entire asset class hardened and institutionalized and stabilized. It was pretty clear that Bitcoin was going to be the dominant winner of proof of work, not Bitcoin Cash, not Bitcoin Satoshi Vision. It was pretty obvious what happens in the event of a fork. It was kind of scary in 2018, right? 2017, 2018, very, very complicated what's going on. But I think that you could start to read the tea leaves by mid-2020, and you could see that this was digital gold on a big tech network, and it was the dominant proof of work crypto asset network, and it was $200 billion by then. And I think $200 billion in 10 years of experience and 10,000 copies, and if it defeats 10,000 copies, and if it lives through a civil war like the block size wars, and it comes out ticking, I think at that point, that's enough history to give you confidence to start to make a serious investment. And I had that benefit, I was very lucky to have the benefit of hindsight. If this had happened in 2018, it would have been much, much more difficult.
And you talked about how it's digital gold, it's digital property, it's digital currency, it's digital energy, and you want all those anyways. With whatever one that is, you want that space. So I think how you view it and how you talk about it, it helps articulate why it's so important, and it almost makes it a no-brainer to own because of the 21 million circulation.
Yeah, look, gold's worth $10 trillion, and if I take $1 billion and I buy gold, I have a 30,000 pound lump of gold sitting in a vault in the basement of JP Morgan in New York City. You can't rent it. No one's going to live in it. It's hard to mortgage it. You can't put a lien on it. you can't develop it. How do I upgrade the value of gold? Like a London Good Delivery 400-ounce bar is like probably the highest value gold. If I make it jewelry, it probably won't be upgraded. So it's challenging to develop gold or generate yield on gold. If I made it digital gold, then I can move it at the speed of light, and my maintenance costs fall and my custody rights increase. And then what you realize quickly is it's not gold, it's property now. Because now I've got the equivalent of $1 billion digital hotel or digital building. And if it's digital building, then I can put a lien on it. I could lock it up for the next 5 years. You know how, like, if I had a building in New York City, I could sell the air rights. And if you sold the air rights to a building, you might make millions of dollars off them. That's a lien. If you mortgage your building, you can live, right? The best idea going is buy $1 billion of property, mortgage it $900 million, put in $100 million in equity, let the money supply expand 10% a year. You'll have $100 million in equity, generating $100 million return every year. Within 9 years, you'll have $2 billion in property from $100 million in equity, right? So you like the idea of leveraging up property. Property, though, means I can lease it, I can sell it, I can mortgage it. The thing that makes Bitcoin better than property is the fact that, like energy, right? If matter is energy and energy is matter, imagine I snap my hands and I decompose the energy, the matter into energy, and then I recompose energy back into matter, right? If I can do that with a hotel, I can take a 1,000-room hotel, I can decompose it into 1,000 virtual rooms, and I can send them to 1,000 cities, and I can sell each hotel room night at the highest rate and get 100% occupancy. And then if I'm smart, I'll break it into room hours, and I'll have 24,000 room hours, and I'll send that to wherever somebody wants a room hour. And then I get cuter and I turn to room minutes. And if I get really cute, I realize that I don't need it to be a hotel room. Can you imagine if I invited you to a business meeting in a hotel room with a bed in it? It's kind of creepy, right? But if I snap my fingers and the hotel room becomes an office, now I can invite you to a meeting in my virtual office, so that's not creepy anymore. And if I snap my fingers again, it becomes a conference room or a conference center or a spa or a museum. All of a sudden, I've got polymorphic real estate in cyberspace. At that point, I'm developing the property, I'm oscillating, vibrating the property, I'm decomposing and recomposing the property. One thinks about it, you realize you go from 70% occupancy at $100 a night to 1,000% occupancy at $500 a night to 5,000% occupancy at like $18 a minute, because it's pure energy. Now it's not even property anymore, right? It just feels like pure digital energy, which is also, if you thought of it as money, money is energy. What did I do? I just loaned out the money to the highest bidder for as long as they wanted to use it. And what do they want to use it for? Maybe Apple Computer wants to build it in the iPhone. Maybe some trader in Singapore has got a way to exploit the basis trade and lock in 18% yield, but he needs to borrow $18 billion, but only for 37 minutes. Can't do that with gold. Can't do that with a building in Los Angeles. You can't even do that with US dollars in the 20th century banking system. Try sending $1 billion to someone on a Saturday afternoon for 37 minutes. You can't do it. Now try doing it between Nigeria and Zimbabwe. You know, I got a company, if I spent 20 years, I couldn't set up a banking relationship with Nigeria in 20 years. What you've got is property that's fixed on granite real estate in the 20th century. You've got gold buried in a vault, and then you've got money locked in a 20th century bank. And they're all forms of property, but they're all 20th century property that's expensive to maintain, slow to move, hard to develop. Bitcoin's 21st century property, I can move it at the speed of light. I could take my $1 billion and send it to 100 million smartphones for a minute and fetch it back. And I could do it friction free. And then I can, you know, at some point, Apple Computer can ship the next version of the Apple iPhone chip. And that iPhone can give some feature to Bitcoin and develop it. I can use Bitcoin over the Lightning Network to provide cybersecurity to everybody on Twitter and Facebook and WhatsApp and YouTube. And I can eliminate denial of service attacks. I can eliminate spam. I can eliminate scammers. I can eliminate online hostility. I can do that by wrapping everybody's avatar or everybody's social media presence with a code of digital energy. And then if someone tries to steal from me, I find them or they forfeit their energy. And if you want to come into my website, you have to come with that energy. And you know, we get hit with denial of service attacks. Somebody wants to launch 18 million web queries against us in an hour. Why? Just because they're mean. They're jerks. Okay, so we fight that. Why can they do it? Because it's free to hit somebody's website 18 million times an hour. There are no consequences to malfeasance. Why? Because there's no digital energy in cyberspace. So, can I use gold to make cyberspace safe for 16-year-old girls? No. Can I use property in New York? No. Can I use money on 20th century fiat rails and Visa, MasterCards? No, I can't. If you want 8 billion people to do business with each other and 100 million companies at the speed of light with no friction across 20, 30, 40 billion mobile devices, across every political domain, you're going to have to do it with digital energy, right? And the internet was stage one. It was digital information, but information is non-conservative. Digital information is non-conservative. That means that I can imitate you. That means that I can spam you. That means I can DDoS you. That means I can harass you. That means I can copy you. And there are no consequences because digital information is non-conservative. When we pair that with a monetary network, Lightning on Bitcoin, and you pair it with an asset, Bitcoin, now you have digital energy overlaying digital information. This is the basis for the 21st century cyber economy. We joke in Bitcoin, we say Bitcoin fixes this. Yeah, Bitcoin fixes everything because it's pure energy. You want to fix your family, give them an endowment that'll last forever. Here's a Bitcoin, give it to your grandson's granddaughter. You'll be rich for the next 1,000 years. Just live off of the yield of the Bitcoin. Give it to your company, give it to a park, give it to your country, put it into your product, put it into cyberspace, right? Because ultimately, what did Einstein tell us? Einstein said, matter is energy. Energy is matter. What is conservation of energy, right? Conservation of energy is the basic principle around which every machine ever invented works. Engineering is the science of it's the study of conservation of energy. If we want to build machines in cyberspace that work, and if you want to build political machines that work, you need a conservative, thermodynamically sound source of digital energy. Energy you can move at the speed of light, energy you can program on a phone, energy that'll last for 1,000 years. It's not electricity. Electricity is analog. I mean, John D. Rockefeller gave us liquid energy in the form of oil. You know, Tesla gave us electrical energy in the form of electric power. You know, Andrew Carnegie gave us metallic energy in the form of steel. These things matter. Fire, steel, electricity, oil, the basis of civilization. Bitcoin's digital energy. It's the basis of 21st century civilization. You just got to think real hard about it. Once you start thinking hard about it, what you realize is this is just the profound opportunity of the century.
There are still, Michael, successful people running companies that swear by gold, that are resentful, that say Bitcoin's fake. And I personally know people that have used their Bitcoin to buy a house or to have a car or to buy things physical. So obviously it's not. But every company's balance sheet right now most of them sit on cash and credit. If they have alternatives, like you talk about, they're holding low risk debt. Obviously, those are both crumbling. So when you have conversations with these CEOs, and they've seen the gains you've had, they've seen the gains Tesla's had, what is their main concern? Are you almost to a point where you're not trying to explain it anymore because you have so much content out there that explains it, and if they really wanted to learn, they could, but they're stubborn, or what?
Let's rifle through that. Remember I said that sometimes people don't do the rational thing because of inertia? Mm-hmm. Okay, with gold, you have trillions of dollars locked up in macro hedge funds where they just haven't really made a reallocation decision in 3 years or 5 years. Once a year, they might move 5%. You know, I can't find a single person that supports gold that actually has more than 50% of their portfolio invested in it. If you look at my Twitter, I noted that Peter Schiff, who's the most notable gold advocate, just admitted that he only has about 5% of his portfolio invested in gold. 95% is invested in something else. Right? He's just trolling, Bitcoiners just to get their attention or something. I debated Frank Giestra. Frank doesn't have the majority of his assets in gold. A lot of times people that are promoting gold are actually owning gold miners. But gold miners are like gold dealers or gold salespeople. They're actually dumping gold on the market to make a commission off of it. They're short gold. They're not long gold. They want to sell it as opposed to save it or hold it. But why? Because some people just haven't really thought about it. When you ask anybody, why do you have gold? They're like, well, for 5,000 years it made sense. Well, do you think deeply about it? It stopped making sense 5,000 years ago. If you study the history, gold's always been a myth. Every single society, there's been a layer of fiat currency wrapped around gold, and then there's been a corruption and a debasement, and it's happened 5,000 times. It was happening 4,000 years ago. It was happening in ancient Sumeria. They were crashing the currencies, right? So gold is always just a partial thing. It was the best bearer instrument. But if we go to, and we go look at other reasons, like publicly traded companies. So if you're a public company, if you're Facebook or Apple, you got a lot of cash, but the majority of your market cap is based upon the P&L part of the business. And only the minority of the market cap is based upon the treasury. And in that case, there are impediments that slow people down. One impediment is the accounting treatment for Bitcoin. It's kind of prejudicial to holding it in a public company, because you can write it down, but you can never write it up. So if I bought $500 million of Bitcoin or say I bought $1 billion and it went down by 50% and then went up by a factor of 20, my balance sheet would show that I had 500 million in assets, and my P&L would show that I had a $500 million operating loss. But in truth, at the end of the period, I would have $10 billion in assets, and I would have $9 billion in investment gains. So you can see that if you're a CFO and very conservative, if you're not allowed to show the $9 billion investment gain, and if you're not allowed to show that you have $10 billion in assets, right, you would go slowly. So I think that there are certain things like that slow down adoption. We've gone from like nothing to about 36 publicly traded companies that have Bitcoin on their balance sheet. So don't get me wrong, it's going pretty fast, but we're really year one. Maybe we're moving into year two right now. And I think it's a 10-year process. It's like, and I'm not bothered by it. Like if you roll the clock back to 1900 and you invented electricity and you said, okay, how many publicly traded companies have electricity in their factories? Well, it's not like they all adopted electricity in the first 12 months. It took about 10 to 20 years to start to wire factories and ships and buildings and products and appliances with electricity. If you look at those pictures of like New York City in 1905, there's all people on horses and carts. In 1915, everybody's got a car. I mean, it took about a decade. And, it moves, but, reasonably 15 years, 20 years sometimes to really change things over. So I think, we're looking at a 10, 15, 20-year time frame, and then some people will move earlier, some will move later. What I say to people is, you don't really want everybody to move too fast, right? Because Bitcoin's going up 170% a year for a decade. It's up 300% in 12 months. If it went any faster, we'd rip the wings off the airplane. Or again, coming back to, I'm an aeronautical engineer. Okay, if you go faster than the speed of sound, you get shock waves. But you might know how many airplanes are designed that fly well below the speed of sound. And now name me a passenger airplane that flies well above the speed of sound. Because the last one was the Concorde. And the Concorde was created in like 1960s and it flew in the 70s. And here we are 50 years later. And we still don't fly faster than the speed of sound because there's a natural speed at which you can move through the atmosphere. The speed of sound is the speed at which air communicates to each other, that the fluid communicates the passage of the airfoil. And so if you move too fast, you generate sparks and friction. So I think 100% a year is pretty fast. If Bitcoin went up by 1,000% a year, we'd rip the wings off the airplane. And so I'd say these sorts of inertia, like capital structures and corporate structures and slow moving board of directors and accounting standards and the like, and regulatory guidance, it takes time. It's okay. If we fixed all this tomorrow, Bitcoin would be trading at $10 million a coin and you wouldn't be able to afford it. As it is right now, you get to buy it at $0.05 million. And when it's trading at $2 million, you could say, yeah, when I was younger, I did the work, I figured it out, and I took my money and I invested in this thing, and now I'm the beneficiary of it. You kind of want it to be a smooth growth adoption curve. You don't want it to just immediately snap forward. What's the value of digital energy? Well, half of everything, $500 trillion in today's money. Bitcoin's 1 trillion. What's the value of digital gold? Well, more than gold, $10-20 trillion. What's the value of digital property? Well, more than commercial real estate, which is 100 to 250 trillion dollars. Okay, so if everybody understood it, you wouldn't have any opportunity. The best idea in the world is one where you do the work, you figure out it's going to happen, and everybody else disagrees with you because they're too lazy or they're distracted. That's what you hope for. Like I bought Facebook stock before they came public. I said, well, this is the dominant social network. This is going to be huge. Everybody else said, what's a social network? You could have bought Amazon stock when it was the dominant online retailer, and everybody on Wall Street didn't believe in it. They're not making any money. Well, when they weren't making any money, Amazon stock was trading $200 a share. Today it trades $3,400 a share. All those people that wouldn't buy it when it's $200 a share, they're all sure they want it now. Amazon was the dominant, digital retailer then. All you had to ask was the question is, will one day people want to order stuff from their home and from their phone? If yes, okay, who's the competitor? Well, there is no competitor. They're 10x bigger than the next competitor, 20x bigger. Okay, so what do? Just buy the dominant network and wait. Google's dominant, Facebook's dominant, Amazon was dominant, Apple was dominant. Not a complicated idea. What's the dominant monetary network in cyberspace? Bitcoin. Pretty obvious. You're not sure? Wait for 13 years until $1 trillion flows into it, until it's been attacked 10,000 times. Then ask yourself, are you still not sure? If it takes you 30 years to notice something which is a dominant network, then your career is over, right? I mean, it's too late. You don't have 30 years to figure it out. You could probably take 10. If you're a genius, you'll get there earlier than that. But, it's a risk reward curve, right? If you bought the stuff at $5 a coin back 10 years ago, there's a lot more risk then, a lot more upside then. Harder to figure out.
On a side note, thank you for sharing that. That really is opening people's eyes, and I'm excited to get this really out to everybody. But in terms of you arguing with Peter, please never stop, because it's very entertaining. So continue to respond to Peter Schiff, because it's something that I think the world enjoys to watch and really laughs at. And I feel like he gets his biggest engagement is when you respond. So I think he's going to keep doing it because he likes to get a little clout from the Bitcoin world. It's funny.
Yeah. Quite enigmatic.
I think his son has a lot of Bitcoin, which is funny. Matt, I'm going to bring on Matt. Matt has a quick question that I think is very relevant to ask. Go ahead, Matt.
Yeah, absolutely. Hey, Saylor, Michael, I'm a big fan. My daughter's name is actually Saylor.
Really?
Spelled the same way. Yeah.
Okay.
So I just wanted to commend you first and foremost for being brave enough and having the courage to see Bitcoin for what it is and what a game changer it's going to be for the economy and for people all over the world. And I think it takes a lot of guts and a lot of courage to do what you did. And you're in a position where you have leverage to really bring that to light to a bunch of other people. And I think a lot of other big companies are taking suit, following suit because of that. But my question was, as a pioneer, as somebody who's pushing for this adoption and all the benefits that Bitcoin provides, I was curious about the resistance that you're facing from a gubernatorial standpoint or a regulatory standpoint, and how much effort you and Grayscale are having to, I guess, put out there to kind of combat that.
I've actually been pleasantly surprised by the support coming from regulators and from politicians. I think if you roll the clock back 12 months, it wasn't clear who was going to win the presidential election, right? I mean, Donald Trump has said some critical things about Bitcoin. Joe Biden has not. And so the Biden administration brought in a set of regulators, I think, that are very well informed and progressive, including the chair of the SEC, Gary Gensler. Gary Gensler taught a class, blockchain and money. You know, we've got to post it on hope.com if you go check it out. So he's been very influential and instrumental. I look and what I saw was there's about 6 senators that are very much pro-Bitcoin. There's maybe a dozen congressperson that are very pro-Bitcoin. I think that the chair of the SEC has made clear Satoshi's innovation is real. I think the one thing that's certain in the crypto sphere is Bitcoin is digital property. It's not a security. It's okay to own it. You can own it as long as you treat it like other forms of property, right? So I think that clarity is Bitcoin is going to be pari passu. $1 billion of Bitcoin is like $1 billion of gold, is like $1 billion of stock, is like $1 billion of land. I mean, you can't send it to your brother without paying tax on it if you've got a capital gain, right? So if you transfer property, your house, your gold, your stock, or your Bitcoin, there might be a capital gain. But otherwise, I think it's pretty clear, based upon the utterances of Christine Lagarde with the EU Central Bank, and Jerome Powell has stressed it is an asset. It's an asset, right? The debate was, is it a currency? Is it an asset? And so people have established it is an asset. It's not a currency. A currency is a politically mandated medium of exchange that you can transfer tax-free. The euro is a currency. The dollar is a currency. The yen is a currency. Bitcoin is a property or an asset. The rest of the crypto sphere, right? There's regulatory clarity coming for stable coins, right? The president's working committee would like to see them issued by FDIC approved banks. I don't think it's a bad thing for the ecosystem. I think that we'll see stable coins go from 130 billion to $1 trillion to 10 trillion to 50 trillion. Right? If JP Morgan can issue $1 trillion of stable coins, everybody wants the US dollar to move at the speed of light for free on Saturday afternoon, right? Everybody wants that. Everybody in Africa, everybody in Asia, right? So I think there's 6 billion people and maybe there's 8 billion people on the planet. Maybe everybody behind the China Great Wall also wants US dollars on crypto rails. So I think that they've laid the foundation for that. I think the foundation for Bitcoin as digital property is laid. I think that the world is waiting for clarity from the regulators on what is a security, what is property. Bitcoin set a standard, right? I mean, Satoshi mined 1 million Bitcoin, disappeared, the coins never moved, right? And it seems like it's the fairest distribution of a community property that we've seen. It sets the standard, so anybody else has to meet that standard, and we're waiting for regulators to tell us, how does everything else move? How should we deal with NFTs? How should we deal with security tokens? How should we think about DeFi? How should we think about every other use case? That's unclear, but I think that if you're a speculator, right, by all means, you can buy, there's 2 Sailor Moon coins. I don't own either. Right? There's like 20 Elon Musk coins and there's 48 Doggy coins. If you're a speculator, have at it. That's speculation. If you're a VC, then you have to be thinking hard about DeFi and how does it sit with CeFi, and it's complicated, but that's a VC thing. If you're a public company or an institutional investor and you just want to like buy something and hold it for 10 years or 100 years and not worry, the safe harbor is digital property on the Bitcoin network is a store of value. Right? I mean, you stay in your lane, right? Right. For example, even in China, where they cracked down on Bitcoin mining and they cracked down on crypto trading, it's not illegal to own Bitcoin. It's not illegal to own it. It's illegal to send it to your buddy around the world. And you know what else is illegal? It's illegal to send money out of China, right? China has capital controls. If you're an individual, you can't carry more than $50,000 worth of capital outside of China. It's a capital control thing, right? I mean, so in a country where you have no property rights, you're not allowed to own any property, maybe Cuba, North Korea. If it's against the law to own anything, it'll be a problem to own Bitcoin. But if you can own things, then the property will be subject to property transfer tax and property capital gains tax, and then trading. And it happens that in the Western world, we have capital that kind of freely moves between the US and Western Europe. So Bitcoin freely moving is not a problem. China doesn't allow capital to move. And then if you look at like Argentina, countries that have collapsing currencies, like if I had $1 million in Argentina, I couldn't just wire it out of the country tomorrow. Like they have capital controls. So there's going to be this little friction over capital controls with weak currencies because the governments are printing more currency and their currency is collapsing against the dollar. So the way I look at it is, figure out what you're doing here. Are you trying to be an exchange? Are you trying to be a bank? Are you trying to be a security token? Are you trying to be DeFi? Or are you just choosing Bitcoin versus gold versus a stock index versus putting money in a second? You're an individual. You're going to buy a second house as an investment property to save your family's wealth and Airbnb it. People do. I mean, it's an idea. But the problem is you have a second house and maybe the renters trash it and maybe you can't Airbnb it and maybe it gets struck by lightning, right? Maybe there's a property tax. In Miami, there's 2% property tax on anything. So if you buy $1 million thing, you're going to pay $20,000 a year every year of your life. And then they're going to assess it up. So when they tell you the thing's worth $2 million, you're going to pay $40,000 a year. So when you understand it as property, and then you figure out what kind of property you want to own, and then where politically, what jurisdiction you're in, then you can kind of figure it out. I think that in the Western world, we've actually got a lot of support for Bitcoin as property. And I think that in the last 12 months, when all these bank heads, when Jerome Powell said it's an asset, when Gary Gensler said it's an asset, when the senators and the Congress people said it's an asset, we want to protect it. When you start to see that, and you see institutions acquiring it, and you saw the SEC approve the futures ETF, it's like, if they didn't want you to be able to own the asset, you wouldn't be able to buy the ETF on a regulated exchange, right? So I think that there's comfort there. I just think if you're a crypto entrepreneur, then there's uncertainty. But just separate. Are you an entrepreneur? Or you're either an investor or you're a saver or you're a speculator. If you're a speculator, buy SHIB Coin 4, Bow Wow, right? Or buy Sailor Moon Coin, right? If you're an investor, choose between Apple and Coinbase, and a crypto exchange or whatever, and then try to parse through all the regulatory issues. If you're a saver and you have pesos, convert them to dollars. That's a stronger asset. And if you have dollars, convert that to Bitcoin. That's a stronger asset. But you see, you're not betting on a company or a product, right? Wherever I am in the civilization, if it's illegal to own Bitcoin in a country, but it's legal to own the dollar, and I'm holding the bolivar, I'm swapping to the dollar, right? And if it's legal, I'm swapping to Bitcoin. And at some point, if you're in Zimbabwe and the currency is going to zero and your family's going to starve to death, even if it's illegal to own the Bitcoin, I'm probably still owning the Bitcoin, right? I mean, at some point, if your choice is starve to death or own something in the gray market or the black market, you got to do the right thing for your family. So that's why I look at that. Luckily, you don't have to make those decisions in the United States, right?
Is there anything
copyrights here?
Are there things that have shaken your certainty and confidence in the past year or two? Or is there anything that you feel could shake that certainty in Bitcoin, or no, because of what you know and what you've researched?
Look, Bitcoin was trading 3,500 a coin, like Black Thursday or whatever, in March of 2020. And now it's 60,000 and some change, right? So I think that the world's got more confident. The price reflects the confidence. Everything that's happened since I started buying Bitcoin has been bullish for the asset class. I bought it personally. MicroStrategy bought it. MicroStrategy bought some more. We issued debt to buy more. We issued equity to buy more. We issued junk bonds to buy more. Square bought more. PayPal supported it. Square supported it. Tesla bought more. Congressman supported it. Cynthia Lummis says, thank God for Bitcoin, right? Senators supported it. The governor of Texas supported it. The mayor of Miami supported it. 12 companies came public as Bitcoin miners. Yesterday, one Bitcoin miner priced a $650 million convertible bond. First time you ever seen that. Other Bitcoin miners selling hundreds of millions of dollars of stock, right? So a lot of bullish things happening. An ETF got approved. A second ETF got approved. A third ETF got approved. All good, right? China cracked down on Bitcoin mining. That was a scare, but Bitcoin's come back roaring better than ever. And as I said, China didn't make Bitcoin illegal. They just want to control their capital flows, right? The crackdown on Bitcoin mining was a mistake. It'll cost them $1 trillion. But countries make mistakes, right? I mean, people do irrational things. The world is full of examples of one country does an intelligent thing, another country does an unintelligent thing, right? People that act rationally win. People that act irrationally lose. I just see a string of good things that have happened in the past 12 months. And I can't put my finger on a single, what's the worst thing? China cracked down on Bitcoin mining. What was the result? Hundreds of billions of dollars of capital flow to the US. And Bitcoin became embraced by the Western world. And now people say, what is the Western world? The Western world is the US dollar, the English language, American law, Western values, Google, Facebook, Amazon, Apple, and Bitcoin. Sounds pretty good to me. I think it'll work out just fine. So I don't see any negatives.
Someone said that we need to change the statement from good as gold to now good as Bitcoin. I agree. So let me ask you that. Yeah. The old school, that mentality. So
either that or name all your daughters Sailor. You can do that too.
I like that name. So you talked about too, and then I'm going to have Darren has a great question as well. I want to bring him on in a second.
Yeah.
You talked about the smartest, wealthiest people got rich and stayed rich with a simple strategy. You're big in simplicity. You're thinking complex, but you simplify it, which I admire. And you're very articulate, which I think helps people's understanding and adoption of Bitcoin. You talk about you create or buy assets that have high quality, pristine assets that you collect and you hold them forever when you need cash. You live, obviously you finance them and borrow against them if you need cash to live. You don't think there's really ever a reason to sell your Bitcoin because you could borrow against it. You actually stated that you feel like it's stupid at some point. Can you explain that strategy? Because that, once again, totally shifted my thinking. And there's a lot of people that do value and want to get wealthy and create generational wealth for their family and really make a difference. So that strategy is not normal. It's not talked about. You don't learn that. I went to business school at U of O, College Lundquist of Business. I did not learn anything about that. Okay. So share that strategy of borrowing against the assets.
Okay, so the strategy is levered long property, leveraged property. Okay, so let's illustrate with a simple idea. You're from a family in New York City, the year's 1972. You have $1 million. What do? You buy property in New York City because New York City is scarce, desirable property. You can buy $1 million of property and the Federal Reserve keeps printing 10% more money a year. If you have $1 million of property and there's 10% more money a year and it's scarce, then logic says the property is going to go up in price 10% a year. Now here's a better idea. You actually buy $10 million of property and you put up $1 million as your deposit, and now you have 10 million in assets and you borrow $9 billion and you pay 3, 4, 5, 6% interest. As long as the interest rate is lower than the rate of monetary inflation, if the money supply is going up at 10% a year and your loan is 5% or 3%, then that works. So now, instead of 10% of $1 million, you're making 10% of 10 million every year. At some point, right, you can imagine you want to make a lot of money. You borrow 900 million, you post 100 million in equity, you buy $1 billion property. The money supply expands by 10%. It's now worth 1.1 billion. Now you have 200 million in equity. You only put up 100 million. You got 100% ROI. If that runs 10 years in a row, you'll have $2.2 billion property value. You had $1 billion in debt. You've got accumulated interest, right? If the interest rates are really low, when the interest rate's very low, this strategy works even better, right? If the interest rate was 10 or 20%, the strategy doesn't work as well because you're getting hit with high interest charges. But if interest rate is low, you might very well find yourself with $2.2 billion of property, $1.4 billion of debt with accumulated interest. Now you've got $800 million of equity. Okay, now you want to live. Your family wants to fly and buy jets and yachts. What do? You refinance the property and you borrow $200 million against the property. Now, is that income? No, there's no income tax on it. Do you sell the property? No, there'd be a capital gains tax on it. How do you actually get the cash? You just borrow $200 million more. Instead of 1.4 billion in debt, you have 1.6 billion in debt. Now you spend your $200 million. And what do you hope for? You hope interest rates will stay low, and you hope that the Federal Reserve will keep printing more money. Because if they keep expanding the money supply, what happened to houses in the Hamptons this year? They went up by like 50%. What happened to houses everywhere in the country? If they're desirable houses, they went up 20%. So this levered long idea, it works for property. Now let's just apply it to digital property. Is there a difference? Not really. You have $1 million. Take your $1 million and buy $1 million of Bitcoin. Now, are you ever going to sell it? If it doubles in value and you sell it, you owe capital gains tax. You might owe 30, 40% tax on another $1 million, depending upon whether you live in California and New York or whatever, right? So if I sell it, then I'm going to, if I sold the $1 million gain, I'd pay $400,000 in tax to the federal government and the state government. I'd have $600,000 in cash, and I'd only have $1 million of assets that are appreciating at whatever percent a year. If I don't sell it, I don't pay any tax. What if I just borrow $100,000 against the $2 million and I pay? Coinbase will give you a loan for 8% interest. I have credit lines where I can borrow against Bitcoin at 2.5%, 3% interest. Right? If you have the right institutional bankers. So maybe you pay 5% interest, let's say. So you borrow 100 grand, you pay 5% interest, you owe $5,000 in interest a year. After a year, you'll owe $105,000. If Bitcoin's going up at the rate of 20% a year, you would make $200,000 by keeping it. If it goes, as long as the appreciation rate is greater than your expense ratio, you can borrow forever, right? Like the second year I borrow another $100,000. But now I've got, if Bitcoin's going up, put the number in again, 20%, you've got 1.2 million the second year, then you've got 1.5 million the third year, then you've got close to 2 million the fourth year. So you can work this out in your head, and what you realize is your rate of liabilities is growing slower than your rate of assets are growing. And when you crank in a number like 50%, what you realize is you're a fool to sell the asset. Yeah. Right? You want a Tesla, you don't pay for it in Bitcoin, you borrow money in dollars, you buy the Tesla, right? And then your Bitcoin appreciates and it doubles 3 more times. And pretty soon you've got like $20 million of Bitcoin and you owe $50,000 against the Tesla. And you got to pay 5% interest. So 5% interest times 5 years is like 25% more. So, okay, well, you owe $60,000 for the Tesla. If you paid for it in Bitcoin, it costs you, it's a $10 million Tesla.
Yeah.
If you paid for it, like, here's the thing, you really want the US dollar to exist along with Bitcoin, because what you want to do is you want to put all your assets in Bitcoin, and then you want to draw credit lines in the local currency like dollar, and you want to pay all your living expenses and live in debt, and then you really want to die in debt. Like crank in a number 20-30%, start with $1 million, you'll end up with $100 million in assets, $15 million in debt, and never paid a dime of tax your entire life. Now all it takes, right? You need an asset that's going to appreciate. What will appreciate? Scarce, desirable assets. I'm not going to guarantee you that Sailor Moon coin will appreciate your entire life, right? It may not be scarce and desirable. You want the dominant digital property network. You want the New York City of cyberspace. But it's better than New York City, right? Because everybody can't live in New York City. Everybody can live in Bitcoinville. Right? So you want the scarce, desirable asset. The second thing you want is a bit of monetary inflation. The third thing you want is low interest rate. The fourth thing you want is you want a bank that you trust. Luckily for you, there's a lot of competition and Bitcoin banks are coming online. There'll be more competition. Luckily for you, politicians are going to keep printing more money. Luckily for you, Bitcoin is scarce and desirable. So now you just got to understand the dynamic. And you figure it out. If Bitcoin's going up 100% a year and it costs you 5% to borrow the money, borrow $1 million at 5%, loan it out to Bitcoin for 100%, scrape the 95% arbitrage, you make $950,000 a year off of $1 million loan, right? You make $95,000 a year off a $100,000 loan. If you got a house and you can mortgage the house and get $100,000 of mortgage and pay 2% interest or 2.5% interest to your bank, and you lend it to Bitcoin and Bitcoin pays you 25% interest, you're getting 22% tax-free yield off of the arbitrage. So find long-term loans at low rates, invest in something intelligent, and wait. By the way, this is the basic principle of all businesses everywhere. Raise capital as cheaply as you can and invest in a business that's growing, that is going to appreciate in value. And it could be the same idea would work for Amazon stock or Facebook stock or Apple stock or New York City real estate or Hamptons homes. It just comes down to what's the appreciation you expect, what's the carrying cost and the maintenance requirement, and can you get capital? If you can't get debt, get equity. If you can't get equity, you get sweat equity, right? I mean, it's kind of that simple.
He is giving us the blueprint. We have so many comments. Michael, these are funny comments. The leverage long strategies, the paradigm shift. I have to research this 7 times. Mind blowing. I hope this call never ends. I'm watching this 7 times. Is this guy IQ genius, smart as hell, blowing me away? I love the comments. There's so many different comments of people really, really understanding what you're saying. And obviously they want to execute that. Uma, I'm going to bring you on to ask a question, and Darren, but I just love that strategy because sadly, it's not conventional in how we're raised or how we think, and it makes so much more sense from first principle. So thank you for sharing that. When I first watched that, it really did open my eyes to a different way to build wealth. And I feel like that's the right way in this new economy. So thank you for sharing something that is simple in your eyes, but I think a lot of people are hearing this for the first time, and it can help a lot of people's families. And this is really how you start building some generational wealth that's protected, because a lot of people are losing everything, Michael, right now in this crazy economy. They're not thinking different. They're not questioning things, and they're losing everything because they're not doing that. So I'm glad we're having this call, because I think it's going to help a lot of people.
I'm doing my best to help. Coming back to first principles, the opportunity would be different if the money supply was inflating at 0% a year and the interest rate was 6%, right? You would think about it differently. But when I peg the interest rates to 1 or 2 or 3%, when the interest rates go low and when the money supply expands faster in an inflationary environment, it's very important, right? We know we're in inflation, but you got to understand that the inflation rate's not 6%. The inflation is the asset inflation rate. It's more like 20, 25%. And if you had low inflation, the urgency would be less. If you live in Zimbabwe or Venezuela, and the inflation rate's 100% a year or 200% a year or 300% a year, then I think if you start to put yourself in that frame of reference, you realize that you really need to convert your cash and your currency derivatives into hard assets. If someone would lend you 1 million Argentine pesos 20 years ago, and you can convert it to $1 million and you did nothing else, you would have made 200 times your money, right? You would get a 200x return if all you did was borrow 1 million pesos and buy dollars, because the peso went from 1 to the dollar to 200 to the dollar. So if you understand that frame of reference, then you realize that certain things make a lot more sense. The challenge is a lot of people living in, say, the United States, they don't have the experience of seeing a hyperinflation or a currency collapse. So they don't have that very visceral, vivid metaphor right in front of their face to cause them to act with urgency.
Exactly. Go ahead, Uma.
What questions you got?
Yes. Hi, everyone. First of all, what an honor. Thanks, Michael, for just dropping wisdom. It's insane. I'm just soaking this all in, and I think everybody is. But I really liked how, you're also talking about the first principle and, thinking for yourself, what you just said there, and coming back to that, I think more people now are really starting to get, more curious about these alternatives, because like you said, when there is a war, then at some point you can't deny the obvious anymore. And really at Apex with my team, we're trying, to make these technologies of the future, like blockchain, more accessible for people, no matter where you're from. And we've built, a reward-based decentralized social media platform, NFT marketplace. We're exploring decentralized metaverse options as well. And I mean, you've also brought this closer, obviously, to corporations through your playbook, like Bitcoin for corporations. So really just making it more accessible for people, and going back to that in the first principle, what do you think, will be the role of digital education in order to just make the Web 3.0, crypto, digital property, in the metaverse as well, more accessible? And how do you think we could best deliver that to include people in the process?
Well, I think that obviously there's a lot of education to be done, and we're going through this transformation where you have to rethink social, and you have to rethink web, and rethink money, and rethink energy, and you want to make the world a better place. You got a couple of choices. One thing you can do is you can create specific education for certain constituencies, right, that's targeted at them, right? I mean, we publish education, like we publish a Bitcoin for Everybody course for free, but we don't have it in Japanese and Spanish and every culture. So you can adapt education. You definitely can deliver education via platforms like YouTube and the web. I think you can also deliver great products like what you're working on. So you've got techniques like, Bitcoin's a technology, and Lightning is a technology, but you have to create Lightning applications and build it into websites and build it into mobile applications. And you have to abstract away the complexity, and then you have to do that in a compliant way in different countries. So building the insanely cool, you can build Lightning into social, into messaging, Like, for example, like my Instagram is full of like, it's full of like spam from Russian bots. Like they're not people. So I can't read my DMs, but you can create a messaging tool that has Lightning in it where it has like 100,000 Satoshis, and then you use that to prevent spam and scamming and the like. So you can build new products, or you could build products into existing products. Like, for example, there's a need at Facebook and Microsoft to actually embed Lightning and Bitcoin and certain crypto technologies into email. And like, you ever try, like I try to read LinkedIn, I have 10,000 spammy messages on LinkedIn. So integrating value into 10,000 networks for safety and security there's an enterprise play there. You build enterprise apps. There's consumer play. You build consumer apps. There's education. You can educate the general public, but there's also services. Like maybe you offer services where you educate people and corporations on how to build digital energy into their products. And then there's services where you educate CFOs and treasurers on how to convert their balance sheets to digital. So there's a lot of work to be done. Some of it you should give away for free. Some of it you can charge money for. Some of it you can productize. Some of it you can build as a service. And some of it is really just pure education and books and the like. And I guess like the good news is there's something for everybody everywhere, right? There's a lot of work to be done. Imagine, let's take the electricity analogy again. We invent electricity. Now, you believe in electricity and you think this is exciting. Now, think about building electricity into a car, or electricity into a boat, or electricity into a hairdryer, or electricity into an elevator, or electricity into a light, or electricity into a bank. There's different issues, right? Handheld electricity versus electricity around water. How about electricity, in an airplane? So you would have all these different fields, applications of electricity. And look, you can teach the courses in college. It'd be electrical engineering, right? Electrical engineering, what is it? Electrical engineering, right? That's a big deal. You can teach the courses, you can write the books, you can create the company, the engineering company, you can create the products, right? Or you can get into a business that didn't exist until electricity existed, electricity trading or something. There's no right answer, right? And if you have all these books and they're written in English, and then you go to Brazil and they're not in Portuguese, right? You're not going to reach a lot of the people, so you have to adapt them. And sometimes there are local standards, right? Local laws, especially with things like digital money. There are different compliance rules. They're different in every country, and they're different. Sometimes they're different in every state, So there's a lot of education there. You can imagine if you're the mayor and someone talks about electricity and you're thinking, I saw somebody's house just burn down. I don't think people should be able to put electricity in houses, in densely packed communities. We might get another fire like Chicago. So, there's even politics, right? I mean, and there's political activism in order to evangelize and educate. And how do you communicate to mayors and governors? That's different than how you communicate to engineers or different than business people, different than consumers. Something for everybody, but I'm enthusiastic about all of it, right? That's why we've got this website, hope.com, where we put up as much information as we can find about Bitcoin. On my own website, Saylor.org, we give away free education, and we created some courses for free, like Bitcoin for everybody, Bitcoin for developers, Austrian economics, things like that. But
That's
we don't
amazing.
have them. We don't have them at every level. We don't have them in every language, and they can always be improved, right? So there's just a lot of work to be done.
It's exciting seeing the upside as well, and obviously people like you pioneering, and all of you guys just sharing your expertise, sharing your wisdom, sharing what you know, sharing his hope.com, sharing his website. that's how we create a movement of people understanding and seeing the adoption. And Bitcoin's already being adopted. Cryptocurrencies at 113%, which I think the internet was adopting at 40 or 50%. So it's already adopting pretty quick. Darren, do you want to go and ask a question real quick? And then we'll let Michael get on here shortly. Go ahead, Darren.
Yes, please. Aloha, Michael. Thank you so much for the wisdom. Hands down, one of the most enlightening conversations I've ever been present for. I have a little bit of a different question. I know we're talking a lot about energy, and something that isn't always brought up, but then sometimes is brought up in a negative light against Bitcoin, is the energy costs of mining and Bitcoin mining, and, you know, becoming carbon neutral like Algorand and some of these other blockchains. You know, we're working on bringing pyrolysis technology from Europe to, you know, help fuel Bitcoin mining with plastic waste, you know, in a sustainable way, converting it into energy. So, you know, I'm curious what your thoughts and, you know, how fast that could also be adopted, you know, where we're looking at a carbon neutral Bitcoin blockchain, you know, where the mining is off of renewable energy.
Yeah, I don't think they're the same thing. You can't fly real airplanes and drive real cars and have real buildings and have real products without things built with real energy. You can fly imaginary cars or fly imaginary planes and drive imaginary cars to imaginary places with imaginary energy. But one of them is the metaverse and the other one is the universe. So Bitcoin uses real energy and real technology because that gives it thermodynamic substance and political substance in the real world. That's how you actually co-opt Iceland or the governor of Texas or a mayor to be supported, because there are Bitcoin miners and there's real billions and billions of dollars of capital and inertia and energy. And I think that you can't, if you were to get rid of that, you would lose a lot of security, but also you'd lose all the political support, and you would lose, you know, in El Salvador, they're going to convert a volcano into progress, right? We're basically we're giving a country prosperity. If I got rid of the energy, then the country doesn't get prosperity anymore. And now what you end up with is a bunch of rich people in New York City that own everything because they have all the money. So proof of stake doesn't solve the problem. Bitcoin, it turns out, uses maybe $5 billion worth of energy, maybe $4 billion of energy a year in order to create something that's got a $1.1 trillion value. If you actually put the one into the other, what you realize is that it's the most energy efficient industry in the world. It's more efficient than Netflix or Google's energy usage by far. Google uses like $140 billion of energy to create something worth 2 trillion. But you can see Bitcoin would be like 30x more efficient than big tech, pure information networks in terms of use of energy. And the energy it uses is really stranded, recycled energy. Like, no one's going to buy that volcano. Nobody's going to use the hydropower on the edge of the grid. No one's going to use intermittent wind that they don't need. So Bitcoin is monetizing stranded, intermittent energy. In places where the world doesn't want to burn fossil fuels, then you're not going to Bitcoin mine. So Bitcoin mining mostly is like sustainable, and it only runs on non-sustainable energy if that political jurisdiction wants to. But I mean, the issue of energy source is kind of a non-issue because every major industry in the world uses more fossil fuels than Bitcoin, right? They're all less sustainable. So if you're going to actually stop the burning of oil or coal, then 99.9% of all of that energy usage is something other than Bitcoin. So I'm not concerned about the energy usage. I really think that the other approaches are platforms for application functionality, right? The reason you use proof of stake is you need speed and functionality, and you can't afford the energy burn. And so does the world want DeFi and NFT tokens and the crypto rails and stablecoins? Sure, they do. They've all got their own application use cases. They have to be compliant with whatever jurisdiction they're going to be in. And there's competition in all those areas, competition between the various crypto asset networks and the CeFi networks. Look, to a certain extent, Binance and Coinbase and FTX compete with Solana, Binance Smart Chain, and Ethereum. So what happens? I don't know what happens. It's unclear. But what Bitcoin has done is it has created digital energy. I'm taking a megawatt of power that has a commercial value of about $1 million at 12 cents a kilowatt hour. And I'm upgrading it to be a megawatt of Bitcoin, and that's worth about $5 million. And I did that by running it through a Bitcoin miner. And when I do that, instead of having $1 million of analog energy or electricity, which I can't store more than a month, right? You lose 2% of electricity in a battery every month. You lose 24% a year. You lose 6% every time you move the electricity on a network. You move the electricity 50 times, you lost it all, right? So the transaction cost and the storage cost of analog energy is obscene. Once it becomes digital energy, I can move it 1 million times an hour with no loss, and I can save it for 1,000 years with no loss. And so if you look at Bitcoin, you say, what we've got is we've got the ability to upgrade analog energy to digital energy, and then I can move it at the speed of light to program it, and I can build the 21st century economy on it. If I got rid of it, I wouldn't have digital energy, right? If I just went to a simple staked network, well, I have Second Life and I have Fortnite and I have Farmville and I have every other stake network and I have central networks, and then we can debate which of them is my favorite one. But what I don't have is I don't have a way to monetize a waterfall in Africa. And what I don't have is a way to convince the president of the country in Africa to defend Bitcoin. I haven't co-opted technology. I haven't created a competitive, egalitarian, empowering digital energy network that's good for the world. What I've created is another Fortnite. And now we're competing to have a better game or a better casino or a better trading platform. And I'm okay with that, but it's a different thing than creating digital property in cyberspace. Right? So I think you need to keep the proof of work on energy in order to be politically and thermodynamically sound and unique.
Awesome. Thank you so much.
Yeah. Good question, Darren. Thank you. Here's another question, Michael, and I think this is probably relevant to a lot of people like trying to figure this out. What is the most efficient strategy to convert payroll for a large company into paying them in Bitcoin or other maybe considered stablecoins? Are there any companies already adopting Bitcoin to pay employees?
The right way to think about it is there's 100 million companies, and they're all using accounting systems that are wired to move fiat currencies, the CNY, the USD, the Euro, et cetera. It took a decade for them to set up that way. Generally, for processing payments to vendors, to employees, or to selling things, I think you want to keep that currency. But the efficient way to do it is when you have excess cash flows or treasury balances, you immediately sweep that into a treasury asset and convert it to Bitcoin. And then if you were working for me, we're establishing some compensation in, say, USD. And then I would say to you, how much of your salary do you want to take in Bitcoin? And then when I pay you, I would set up a BTC Pay server or BitPay or some kind of application, and it would immediately convert the Bitcoin at the point that I pay you into Bitcoin. And the reason that I want to do that is if I paid you in Bitcoin that I had acquired a year earlier, I would owe capital gains tax on it. So I would be accelerating the tax bill. But if I pay you in US dollars, there's no tax bill. If you immediately convert it, then you get all the benefits of being paid in Bitcoin, but I don't have the tax obligation. So what you really, and if you pay me in Bitcoin, well, if you pay me in Bitcoin, if you acquire the Bitcoin for less than it's worth when you pay me, you would owe a tax. And if you're an individual, maybe you just say, I'm going to ignore that. I'm not going to pay the tax. Okay, but companies can't do that. Like Amazon, you know, and MicroStrategy and Microsoft, they can't ignore that. They have to keep track of the tax. So you want to convert from fiat to Bitcoin at that interface. If a vendor of ours said pay us in Bitcoin, I would convert the US dollar to Bitcoin on the day that I paid them. And likewise, if someone wanted to pay me, if they pay me in Bitcoin, I'm fine. I just keep the Bitcoin, right? But ultimately, what you want is you want the ability to transfer, or you want the ability to transpose from fiat to Bitcoin and back again instantly. And the number one driver here is tax. You know, it's always a mistake to incur unnecessary tax early, right? Mm-hmm. It's kind of a basic principle of life. You don't want to pay tax. And then the secondary issue is accounting. People have spent $1 trillion on accounting systems, and you just want to work within your accounting systems. And those accounting systems are generally wired. They're wired in the local country's fiat. So in Japan, we account for things in yen, in Europe in euros, in the US in dollars. And that's just the way the taxes and the accounting systems work.
So I want to hit real quick on inflation. We already talked about it, but you stated it's a problem, and obviously Bitcoin's a solution. But it's an issue right now currently, and it's super relevant. In the short term, there's some things that we know will probably be solved, but is there anything for you long-term inflation-wise that the government can do, or anything cryptocurrencies can do for inflation? Like the long-term inflation, especially at the government level, can be like somewhat fixed. Do you have that answer or anything you could think of?
I
that's
think
something that's a big deal.
You know, there's $100 trillion in currency type instruments around the world, and another $100 trillion in credit, and there's another $100 trillion in equity, and there's another $200 trillion in property. And so as the governments expand the currency supply, there is inflation. And then when the inflation comes, we tend to bid up the price of assets. So it's like we're monetizing assets. Another way to say it is the house went up in value because an investor bought the house as an investment. They didn't want it to live in. So if I double the money supply and I give the money to a big investor, they go and buy all the houses in your country and they double the price of the house, and you can't afford the house. We've monetized the house, and it's good if you own the house, but it's bad if you're working for cash wanting to buy the house. So as Bitcoin grows, it's demonetizing other assets. So you have a choice now: buy a second home or buy Bitcoin. If you buy Bitcoin, the price of housing won't go up so fast. You have a choice: buy gold or buy Bitcoin. If you buy Bitcoin, the price of gold will not go up or will go down, right? If you have a choice: buy stocks or buy Bitcoin. If you buy Bitcoin, stocks won't go up as fast. And you have a choice: leave your money, buy bonds or buy Bitcoin. If you buy Bitcoin, the bonds won't go up so fast. So this is 1 trillion out of 500 trillion in stuff. It's still a small amount. If it doubles every year for the next decade, it'll be like $100 trillion out of 1,000 trillion worth of stuff, right? So it'll still be 10%. But at some point, as it keeps growing, the excess monetary energy flows out of the other assets and it flows into Bitcoin. And what we would say, if we're an economist, is price discovery will return to the other markets. Right? And you do a little experiment. If you live in Miami Beach and there's 1,000 houses and I triple the money supply and there's no Bitcoin, and the only thing you can buy is a house, the price of every house goes up by a factor of 3. But if there's Bitcoin and I triple the money supply, maybe you buy Bitcoin with it, and because you only need one house, and the price of the house doesn't go up that fast, and the price of Bitcoin goes up fast. So you see, Bitcoin is like that sponge. It's sopping up inflation. Now, over time, that returns rational behavior to the markets, but it's not jarring. It's not going to happen in the next year. It's a progressive force. Gradually, as the monetary energy flows out of these other assets, they become more affordable. And as the monetary energy flows out of sovereign debt, the interest rates will go up. It's harder to issue debt. You have to pay a higher interest rate. If you have to pay a higher interest rate, you could say, well, isn't this bad for the government because they won't be able to issue as many bonds? Yeah, they'll have to print more money. They won't buy their own bonds. Well, that's bad for inflation. Yeah, at some point, they'll realize that they can't print that much money, and then they'll have to start to switch to either cutting costs or raising money with taxes. So ultimately, if a government's going to spend twice as much money as it generates in tax revenue, it has to pay for it with inflation. And when you can't inflate anymore, when there are $500 trillion in Bitcoin, and there's only 10 trillion in currency, right? When that happens, the governments of the world will switch to taxation. You know, if they're democracies and they're fair, they'll switch to a political dialogue on taxation. If they're dictatorships, they switch to expropriation, right? In an authoritarian society, when they run out of money, they just take everybody's stuff. Like they just seize the company, they nationalize the oil company, they nationalize your land, they take everything. That could be like a Cuba situation, right? You don't want that. We're hoping that won't happen. What we're thinking is in the Western world, when you can't inflate the currency anymore, eventually we'll switch to a political dialogue over who should pay their fair share and what should the tax rate be. And when that happens, people will start saying, maybe the government should cut back on their expenditures so they don't take all our money, right? And that's playing out right now in Congress, even this week, at a small level. But it gets to be a bigger deal as time goes on. And that'll be the soft landing. You know, like the way you want this resolved is with the political process and negotiation and peaceful resolution. What I say about Bitcoin is spoils of peace, not spoils of war. If you have a bunch of money, let's say you have $100 million, and it's land and buildings and a company, and the government wants it, they hold a gun to your head and they take it. And if you won't give it to them, they shoot you and they take it and they get it all. But if you have that same money in Bitcoin and the keys are in your head, the government wants your money. No, if they shoot you, they get none of it. You see? So maybe we just split the difference. I'll give you 2% a year. I'll give you 3%. Right? Ultimately, maybe I'll give you half, but I keep the other half, right? It's a negotiation. And that punishes violence or discourages violence, encourages negotiation and peaceful resolution. Ultimately, if the government insists on spending money they don't have, someone's going to pay for it. And so if you have wealth in the society, it's in your best interest to get involved in the political process so that you've got a senator or a congressperson or you're part of the administration. So when it comes time to decide what the tax rate's going to be, at least you have a seat at the table to discuss. What I've said about Bitcoin before, which is worth saying, is it's the hardest property in the world to tax. If you have $1 billion building in New York, you can't move it. If you have $1 billion company, you can't move that either. If you have $1 billion in gold, you can't move that either. If you have $1 billion of land, you can't move that either. If you have $1 billion of Bitcoin, you can move that at the speed of light anywhere in cyberspace, and no one knows you have it. They don't walk past it every morning. So it's not that it's not that you can't be taxed, but it's like that theory. If you have a car parked on the street and someone says you should lock your doors, and then one of your snarky friends says, oh, really good car thieves can break into your car even if you lock the doors. And the answer is, yeah, they can, but if the car in front of me and behind me is nicer than mine and the doors are open, they'll steal that car first. You know, make it a little bit difficult to steal your car. Make it a little bit difficult to tax your property. I tell you this, LA is never going to tax Bitcoin if you can move it to Wyoming in a split second, you see. Mm-hmm. They will tax your building because the building's not going anywhere.
That's a great point. Great way to look at it. So I want to end with these two last questions so we can obviously let you continue on your day. I want to switch gears to more of productivity tactics and how you're working on the business versus in it, because this is kind of selfishly for me, but also for a lot of business owners and CEOs listening. Obviously, you're running the business. You're in day-to-day operations. and you're also studying. You want to learn more about the bills, what's happening with infrastructure, what's happening in the marketplace. Are you monomaniacal about your time with like, okay, morning, 3 hours, I'm studying, no distractions. After that, it's my work. Or are you more, is your schedule a little more based on where you're at, you're traveling, willpower? What's kind of your daily schedule, and how do you get into company and studying?
Luckily for me, like I've had the business for 30 years. So we started in 1989, and we developed a whole set of systems. So we've got a set of systems and protocols, and we've got a really good management team. And, you know, in the early days, I did a lot of stuff myself. And then later on, we automated stuff. And then I delegated down parts of the business. And around last year, I put Phong Le, the president of the company, in charge of operations, right? So over time, I built a really good management team. And we have a product and a process and a leadership team. And we even have education where we educate everybody. So we've got a system, and that system means that, you know, I don't have to be engaged every minute by minute in every decision. So I'm fortunate like that. What I would say to anybody is the way to think about business and life in general is this way. You have a P&L and you have a balance sheet. Your P&L is your occupation. It's your vocation. It's what you do. How do you add value in this world? Is it podcasting? Are you a dentist? Are you a basketball player, right? What is your job? You should be competitive in that job. What we do on our P&L is we sell enterprise software to thousands of companies, and we compete against other business intelligence software companies. Okay, in that job, it doesn't matter what you are, dentist, doctor, driver, you know, professional marketer. You have to master the tools, the tools, the techniques of your profession. You have to focus laser-like on that. Don't make the mistake of thinking because you like Bitcoin, you should stop doing your job as a dentist or a doctor, right? If you're a dentist and you're good, you should be the best dentist you should be. You should grow your practice. You should hire assistants. You should generate as much money as possible. Then on your balance sheet, you should take your cash flows and you should convert them to Bitcoin. And that way, you know that your life savings will not be debased because your treasury will accrete. Now, if you want to go harder, like if you want to go faster, if you can mortgage your house, if you have $1 million a year practice and someone will loan you $3 million, you borrow $3 million against your dental practice, and then you buy Bitcoin with it. And what you've done is you've accelerated your cash flows for the next decade. Like maybe you're making $200,000 a year for the next 10 years. So you borrow $1 million against that, and you take the million and you buy Bitcoin. Now you've actually increased the size of your treasury by a factor of 10, right? You could take that to another extreme. You could sell equity in your company or in yourself. If you sell equity at the right price, then you could invest that. But so on the balance sheet, you've got financing things you could do: sweep cash flows, sell equity, sell debt, and then buy an asset that's going up in value. On the P&L side, do whatever you can do. It might be that you can tie your business into digital economy and digital assets and Bitcoin and crypto. Like if you're a podcaster, you can do podcasts related to education of that. If you're a bank, you could be a Bitcoin bank. If you're a mobile app company or communications company, you could build Lightning into your communications, right? So maybe you can improve your product or your service using digital assets and crypto technology and Bitcoin. Maybe you can't, right? Maybe you're a farmer and you raise cattle. Okay, don't like quit your farming and become a Bitcoin miner because you love Bitcoin, because you're competing against 1,000 other Bitcoin miners. Make sure that you've got critical assets in whatever business you're going to compete against, because they're different things, right? Run your P&L efficiently and do the best you can, and grow it with the best ideas you have, and then manage your balance sheet prudently. And then you'll probably get a good result. Don't borrow money at 20x leverage and get forced liquidated on Saturday night. That's not smart, right? That's stupid leverage, right? And don't convert your successful business into going in competition with Square Cash App. because you think it's cool, because you're probably not going to beat someone else with more assets. But if you've got some cool entrepreneurial thing and you can tie it into the crypto economy, then more power to you. Have at it.
It wouldn't be a call if I didn't ask. We've had a lot of people asking about predictions. First, I want to thank you so much for your time, for your knowledge, for your wisdom, for really, really spreading the truth of first-based thinking, the first principle thinking, and really educating people on the future, because I feel like this is really the best way to push this culture forward, is moving into the 21st century, like you say. I know you're not big into short-term predictions. You don't do a lot of them, but is there anything you can share of what you predict end of year Bitcoin and then 2-year Bitcoin and maybe 10, 15 years down the road, just so we can kind of hear that for people that haven't heard that from you?
I mean, I can't give you a specific prediction for a specific time, because what I expect is Bitcoin will go up forever with volatility, right? It's not going to go perfect straight line. It's going to surge forward, consolidate, surge forward, consolidate. But, as I've said, the way I look at it is I think it flips gold and then it replaces real estate. And eventually there's no reason why it can't become a multi-$100 trillion asset. So I expect it'll go up by a factor of 100 to 200 or more. And I think it's just going to progressively advance this decade. And at some point, logically, every year the volatility decreases. Maybe the growth rate comes back a bit. You go from 300% to 200% to 150% to 100% to 75% to 60% to 40%. The volatility will come in as the networks get more mature and the exchanges get more mature and the crypto assets get more mature and institutional investors come in. So it's just all natural, mature seasoning for a good reason. And the use case, Bitcoin's going to appreciate in value because of A, inflation, B, adoption, C, utility, and D, productivity. And by that, I mean, in your frame of reference, right? If you're in Argentina and the inflation rate's 80%, Bitcoin's going up in pesos at more than 80% a year just because of that, right? So hyperinflation will hyper drive the price. Low inflation drives the price lower. So it goes up because of that frame of reference and inflation. But if it gets built into every iPhone and Android phone and 8 billion people can move at the speed of light 100 times a day, and if it gets built into Twitter and Facebook and Square, and YouTube and Tinder and WhatsApp and Telegram, right? The utility goes up, the price is going up, right? And if 100 billionaires all buy $1 billion each, okay, forget about the other two things. It's still going up, right? I mean, adoption, right? When Apple decides to buy $50 billion of Bitcoin, it's going up regardless of technology or inflation. It's just going up. And now when everybody's got it, when 8 billion people on the planet have half of their money invested in this asset, well, then classic Austrian economics theory says it'll go up with the productivity growth of the economy, right? Like if the human race generates 3% more goods and services every year, the value of the money will go up by at least 3%, right? So it's an appreciating asset that will be progressively less volatile, progressively slower growth, but it'll be high growth an entire decade. Right? Ask me at the end of 2030, what's my forecast? But we're looking at an exciting decade, and you just got to strap in and be ready for the volatility. If you don't have a 4-year time horizon, you probably shouldn't buy it. And I think, you should be thinking, I'm buying this to hold, minimally a decade, but like, why would you just hold it forever? Give it to your grandkids. Like, the only reason people have to sell anything is the asset's too expensive to maintain, like a boat, costs you 10% of your purchase price. It's too expensive. Or they flee the country and they can't take it with them. Or someone impaired the asset. Like I bought a company and the CEO went crazy and he screwed it up. It's destroyed. But if what you're buying is 1 unit of energy, 1/21 millionth of energy on a network with no CEO and no jurisdiction, well, then why would that ever be impaired, right? As long as people need sound money and they need Bitcoin, I mean, 500 years from now, it should still be 1/21 millionth of all the energy on the network. So why would you ever sell it? You got to buy something better, right? You're going to sell it if you don't have a bank. If you don't have a good banker and you can't borrow against it, you'll have to sell it. And you'll sell it if you thought there was something better. But if you don't, and even if you found something better, arguably a smart person, like if you had 10 city blocks in New York City worth $25 billion and you believed in Bitcoin, well, Bitcoin is better, but you might just take a loan against the 25 city blocks of New York City and keep New York City and keep Bitcoin, right? So you may still never sell it, even when you buy something better. If you want to get rich and stay rich, you kind of have to own high quality property forever. The royal family in England, they own Chelsea, right? They own London. They still own it hundreds of years later. They're not selling it ever, right? Just keep it.
So times 200, that's 12 million right there minimum. So you think it's inevitable, and obviously you've made predictions, and you've been right on. So once again, man, thank you for who you are, for what you represent, for what you've built, for the legacy you're creating. It means the world to us that you spent time with us today. I know how valuable your time is. So what we can do for you is we're just going to continue spreading the word and share hope.com, share your websites, and I'm going to continue following your journey, man. And thank you so much for your time today.
Yeah, thanks for inviting me. Keep the faith. Good luck. I appreciate everything.
Thank you. We have a lot of people saying thank you. Appreciate you guys.
Hey guys, if you like that interview with Michael Saylor, as it did blow my mind, you're gonna really like this one right here with Bitcoin enthusiast Peter McCormack, where he talks about this crazy time we're in. Click right here.
Anyone investing in Bitcoin, I say to them, you have to play the long game with this. You have to be thinking multi-year, even decade.